Time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And, you know, we really try to keep you abreast of what's going on, and that's what this show's all about. We're going to talk about last-minute things that you should make decisions. We're going to talk about what we project is going to happen next year so you can kind of make those kind of plans. And we would love you to be part of our show. 803-0930, 803-0930, star 930 on a cell phone. And you can ring in and ask a question or tell us what you're thinking. Love to hear what you have to say. And, of course, I got Tiffany Fabian here in studio. Hey, Tiff.
Hey there, Esther. How goes it?
I'm good. And Christopher Fabian.
Hello, Esther.
And I heard you're making turkey soup.
Yeah, I was going to say, I thought you were going to say we were going to give them turkey breast instead of staying abreast.
No, we all had enough turkey breast, right? All right, so let's talk about things that are coming up. Oh, by the way, we have some seminars coming up.
Yep. January 21st, we have a seminar with Russ Gullo, and he's a navigator who helps you do in exchanges for real estate, and he's got a lot of great information. He's going to combine that with some information about taxes, tax changes to look out for, and healthcare information.
If you have rental property, investment properties, and you would like, and maybe it's fully depreciated and it's going to cost you a ton to sell it, we're going to show you how you can actually exchange that property and through the magic of the 1031 exchange.
Yep.
So effectively you can take your property in Cheektowaga and move it to Boca Raton.
Yep.
And it's really easy to do, and it'll save you a ton, and that's what we're all about.
Yeah, and he would like people to call and register. You can call our office, 632-7886, and we can register you, or you can call Russ Gullo.
At 675-1500.
Right, and you can register that way. He would really like you to register for the event on January 21st.
You know where it's going to be?
It's not going to be at the Millennium.
But that's good. But it's not going to be. It's not good.
I don't know.
But you know, this is something people really don't realize. But Esther,
I'll
you
look
and I
find out.
We're talking today to somebody who they've owned a building for 60 years, and it's something that they should look into.
That's true. I mean, like, for instance, the building that we were talking about today happens to be in a non-retail area, not a high retail area. It's a great building. It would be a great office building. But truly, if this person did an exchange for a building maybe on Transit Road, I think their business would go up.
Oh, definitely.
Unbelievably. And so he doesn't have to pay the taxes on it. You basically do the exchange. And so if somebody says, yeah, how do you get somebody to exchange? It really is a sale. But it's not really a sale. But it's all done with the magic of paperwork, right? All right. Well, why don't we talk about, and again, 8030930, 8030930, star 930 on a cell phone. We want to talk about some of the things that are changing. Oh, by the way, opening day this year for tax season is January 23rd. We're going to be open in all of our offices on the 18th. So we'll actually prepare your returns, but we can't send them until the 23rd because the IRS is not open for electronic filing till then. And the other thing is that you should know is they're actually holding up a lot of refunds till after February the 15th, especially if earned income credit.
Yeah, if you have a child, expect your refund to be delayed.
And so what we always say to people is if you need your money and you're going to get a big refund, change your W-4 now so that they stop your withholding, so that you got your money for December, so that you don't go into debt and go into charging, right?
That's right.
And then your refund will be slightly less in springtime, but you will have not gone in debt for Christmas and the holidays.
Yep, definitely.
All right. The other thing is the minimum wage for salaried employees has been stopped. So those people that we were talking about, if you were somebody that was managing a Kentucky Fried Chicken or something and your salary was $700, it was supposed to go to $913, but that meant that the company might have changed you to an hourly position so that they could stay in business. And that whole falderall and everything that happened was stayed by the courts, and they said that Mr. Obama, who had done that through executive order, had overstepped his boundaries, so that's been stopped for December the 1st. And this year, for 2016, the personal exemption, standard deduction, and all the phase-out items have been adjusted for inflation, right? And the other thing we got to watch out for this tax season is refunds are going to be slowed up because they're doing identity theft protection.
Yep. That's right. And so it's just a growing problem. And so the IRS, they always do every year what their mandates are, what they're really trying to focus on. And one of the things that they're focusing on this year is identity theft and protecting Americans' identity.
So if you file your own return, let's say that you're somebody that does your own return and you file it electronically and the IRS rejects it, that means somebody probably took your identity. And so if you need help, you can call EG Tax and we'll help you with this. The other thing is we're doing pre-funds this year. You guys want to explain what that is?
Yep.
Because you're holding up all these refunds.
Right, because they're holding up all these refunds. If you wanted to file your return and you didn't have the money to pay for it, the tax prep fees would come out of your return. But the nice thing is a pre-fund, you can get your refund if it's approved within 48 hours. So
it's actually not your refund. It's a loan.
It's a loan against your refund.
But it's one that doesn't cost you anything.
Right, and you get a fronting of $1,000. And so you're going to get $1,000, which is nice. So you'll get a little bit of your not your refund, but a pre-fund.
Right.
And you get to use part of your refund of the use of it.
That's exactly right. So, and the other thing is, we're partnering with two major car dealerships in the area, and what they're doing is they're not doing a pre-fund, but they're actually loaning people the money to get as a down payment on a car. Based upon their projected refund, and EG Tax is partnering with that. That's Keepo in Niagara County and Schultz down in
Jamestown
and Olean. Right.
So if you need a car, these guys are going to loan you the money based upon your future refund and help you to get in a car for before Christmas. And this is before we got your W-2, so we're going to do it based upon a pay stub.
That's right.
Okay, because actually it's a car dealer that's going to be issuing you the money, right?
Right.
Okay, so what we got planned here is to tell you what you need to look out for, looking ahead to what we project is going to happen with the Trump administration and income taxes. So you want to be listening to that too. 803-0930, 803-0930, star 930 on your cell phone. And we had Mike, who's been holding for a long time. Hey, Mike, how can we help you?
Good, Esther. Great show.
Thanks.
6 years ago, I lost my vision. I went blind, completely blind, and I'm on Social Security disability. That's only income. I heard you say a couple of weeks ago, some gentleman called and he says, I haven't paid taxes in 6 years, and so I pay rent. I heard you say something about
a renter's credit.
Yeah. Would that be something that I could...
All right, so there's a couple criteria. Your total income from your Social Security has to be less than $18,000 a year. Is that your situation?
Yeah, I am. I'm way under that.
All right, and then so he would qualify for an IT-214. So it's not going to be a lot of money. It might be $70 or $80, but
can't own property worth more than $85.
Yeah, is your rent under $450?
I pay $700.
Does that include utilities?
No.
Then you won't qualify.
No.
Too much money for rent.
Too much money for rent.
Oh, okay.
Okay?
Okay.
Thanks for calling, Mike.
Okay, thank you.
Bye-bye. Okay, and let's go to Bill in Buffalo. Hey, Mr. Bill, how can we help you?
Hi, how you doing? Good afternoon. I have a few questions. Is my wife, my wife, is my wife allowed to claim me on her taxes that has end-stage kidney failure?
All right, so the two of you are married, and she's going to file a joint return. When she files a joint return, that means that both of you are listed. So she's going to have her personal exemption and your personal exemption. So in effect, she's claiming you.
Okay, and does she do anything at work with her W-4 or W-2 or whatever it's called? Or
All right. Now, so you didn't work at all last year, correct?
no, I'm on dialysis every day.
All right. So do you have children?
No income.
Do you guys have children?
I have one child, 9 years old.
Is the child living with you?
Yes.
And what is your household income approximately, not counting Social Security?
I don't know. She's doing $12 an hour, 40 hours a week.
All right. So she's making less than $30,000 a year, around $30,000, right?
Yeah.
All right. So the two of you are going to get an earned income credit. All right.
Okay.
Probably an additional child tax credit. And of course, you're going to file a joint return. So, and if there's any expenses that you're incurring for dialysis, the medical expenses, if it's over 10% of your adjusted gross income, you may be able to take it as an itemized deduction as well. And did you have to do any modification to your house to help you with your condition?
No. I'm not invalid. I'm not crippled or anything. I drive the car. I mean, she pays for the...
Okay.
And then I would change her withholdings at work, especially for the last quarter. Do you know what she currently claims on her withholdings? You mentioned that, Bill.
I honestly don't know. I'm in dialysis. I really don't know.
All right. So what you might want to have her do, Bill, is give us a call, and we'll go over her situation with her, and we'll give her heads up and get you a little extra money maybe for this time of year.
Okay. Do I see you, or do I go to the guy?
No, all you have to do is call our office.
We could do it over the phone.
Yeah, it's 632-7886, 632-7886. Our website is egtax.com, and you can just call, and there's no charge.
Bill, were you working in 2015? Is this a new event, not working?
Nope.
Okay. Yeah.
Okay.
I'm 2 years in. I'm
2 years in.
All right,
Okay.
so if there had been errors, we can amend the returns and get you some money back, too. So have her give us a jingle, okay?
And it was 632 who?
7886.
Okay. I really appreciate your time.
You're welcome, Bill. I'm Esther Gulius, the tax lady from EG Tax. We're going to take a short break. We're going to come back and talk about what you should do, especially in light of what's going to happen that we project with the change in the taxes due to the Trump administration. We'll see you on the other side.
EG Tax has a special gift for you. After all, it's the holiday season. Let EG Tax come to your group or function and present a seminar to help you reduce your tax bill and get ready for the upcoming tax season. This is on a first-come, first-served basis, so don't wait. Call now. Call 632-7886 or click egtax.com. Again, call 632-7886. And happy holidays from your EG Tax family.
Auto Group is always bringing you new and exciting deals. This year, to get a jump start on tax season, we're partnering with EG Tax.
I'm Esther Gulius, the tax lady. EG Tax will help you to get a jump start on your future tax refund.
Based on your future tax refund, Keepo is able to advance you the money towards your next vehicle. That way, you can drive away in one of our new or pre-owned vehicles sooner.
So to get a jump on tax season, EG Tax is asking you to come join our family.
For your next vehicle, where should you go?
Keepo.
This is Attorney Dennis Kitchen. Have you been injured? An accident can be a devastating experience, and afterwards an injury victim has questions. What are my rights? Can I be compensated for my injury? How does the no-fault law affect me? How do I deal with my insurance company or with the other party? It's important that you talk to a lawyer as soon as possible when an accident occurs. I'm Dennis Kitchen, and I'd like to help.
If you've been injured, call attorney Dennis Kitchen at 716-631-5661.
Read the news online at WBEN.com.
I love you, baby. Hi, I'm Esther Gulius, the tax lady, and I love you. And I'll tell you, we want to help you with your taxes, your finances. If you're getting love letters, it's just before the end of the year, you're wondering about the holidays, we are going to try to help you.
I was wondering if you put up your tree and your decorations.
Of course.
Yeah, we have our wreath on our door.
Yeah, well, I got my wreath on my door, too.
And your tree.
And
up.
I have 2 wreaths by my front door, too, that are all lit up. Not wreaths, Christmas trees. Trees. Let's talk about. Chris, you want to tell everybody about what we're doing with health insurance too?
Sure. Let's not forget that health insurance to sign up through the exchange is currently going on. It's you can sign up through the end of December. It's sort of affordable, if depending upon your income. I mean, but that's...
If you don't get sick, it's affordable. But by gosh, if you get sick, the deductible will kill you.
We have a great staff on hand that can show you all the policies, and there are a ton of policies to choose from. You know, where people might say, I need the gold or the platinum because it's the best, but you could be throwing away $300, $400 a month because all you may need is the silver.
Right.
And that's what we take
or
the
the
time.
essential plan.
Right. We take the time to go over and get you in the right one that fits for you.
And we're making a lot of money doing this, right, Chris?
Oh my God, we're the Brinks trucks just backs in every day.
I mean, we do this for free because it's a terrible thing to have to tell somebody, oh, by the way, your penalty's $2,500 because you didn't have health insurance, and they didn't know about any of the options. So we thought it would be best for us to be able to help people so that we don't have to tell them that they have a penalty, and help them out.
The penalty this year is $695 a person, or 2.5% of your taxable income, whichever is higher.
Right. So $100,000 would be $2,500. Right?
That's a lot of bread.
Okay, let's talk about things that are going to happen here. Well, first of all, it's no secret that everybody knows that we have the House, the Senate, and the President executive branch all run by Republicans, and the Republicans have been itching to change the tax code for many years. So everything that I've studied is that it looks like the tax brackets are going to drop substantially. And so because of that, if you have an opportunity to defer income till 2017, then you would pay at a lower rate. So let's say this year you're in the 25% bracket. Next year it's projected that you will be in the 13% bracket.
Wow.
Right?
That's a big swing.
So if you could, like for instance, let's say this time of year you said, well, we're going to give money to the kids for Christmas, and we're going to take money out of our IRA to do that. And if you wait till January to do it, and you save 10%, if you took out $50,000, you save $5,000 in taxes. Do you understand what I mean?
Yep.
Because
just
next year
is
when it's going to be taxed, and that would be after they do the tax changes. And so that same amount of money would be $5,000 less in taxes next year by deferring income.
I'd rather have the $5,000 taxed at 13% than 25%.
That's for sure.
Yeah.
All right. The other thing is, conversely, right now, with tax rates being higher, you want to pay up deductible expenses because you're going to get a bigger bang for your buck. So let's assume that you have extra itemized. Let me say you were thinking about getting new dentures, and it was going to cost you $10,000. It's not. I think I'll do it after January because after Christmas. The truth of the matter is, if you are able to itemize and you had an extra $10,000 in medical at 25%, it's a $2,500 savings. If next year you're in the 10% bracket, it's only $1,000 savings. So you'd save $1,500 by moving your deductions into this year. Okay,
makes sense.
Okay. Same
thing for charity, work expenses. If you're thinking of buying a new for your office and home, if you're thinking of buying a new laptop, if you're thinking of buying a new desk for your office and home, this would be the year to do it.
You want to move your deductions into this year, and you want to move your income, if you can, into next year. Like another thing is, if you're going to put money into a pension plan, a lot of people, Chris, don't know what an elective deferral is. Do you want to tell them?
It's better than a 401k. You can defer more money out of your paycheck and have it go right in there, so you're not paying taxes now. So at a 25% tax rate, if you're in the 25%, you can save that money to put it in this pension plan and deferred plan and take it out later when it's a reduced rate, when your income's lower, and who knows what the income tax rate's going to be 20 years from now.
Can anybody do an elective deferral?
Well, elective deferrals is the thing of the land. That's how, in a 401k, it's elective deferral. So if you're 50 years or older, you can put $24,000 away. A lot of times people think they only can put 6% or 8% away. The truth is, you can put, if you're 50, you can do a 50 or older, you can do $24,000.
Right.
If you're under 15, you can put $18,000 away. And again, if you're you're in the higher tax bracket this year, you get the better benefit this year.
Yep. I was talking to somebody the other day, and he's going to have a raise or a big bonus this year. And he said, "What can I do?" And so he's over the age of 50, so he's going to max out his 401k, which is really good. And so these are smart conversations to have.
And that's what's so important is, in 3 weeks, it's too late, and so it would be in the 2017 tax year, and that's when the new Congress and the House will be in session. And so it's true, if you put away your elected deferral next year of $24,000, that's good, but you might only get it multiplied by whatever tax bracket you're going to be in next year.
And don't forget, you might want to do a state estimated payments. Now is the time to do your extra estimated payments to New York State, because that's a potential write-off on the Schedule A, so take advantage of that.
I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. Love to hear what you have to say. The other thing is, how many of you have decided this year to move from your traditional IRA to a Roth?
Yep, there's a lot of people that have decided
so
to
let's
do
say
that.
you say, I'm going to move $100,000 out of my traditional IRA to my Roth. If it were me, I'd reclassify.
Before the year closes.
Right. So why would I reclassify, Chris?
Well, because right now, first of all, like we were saying, the tax rate's at 25% if you're in that bracket. Next year, it's projected to be 13%. So you could save 12%.
On $100,000, which is $12,000.
Yep.
So what you basically do, if you are somebody that did move money from a traditional IRA to a Roth, you call your broker and say, and you have to do this by April the 15th, I think it is, April 15th or April 30th. You tell them, I want to reclassify from the Roth back to the traditional.
And if somebody was thinking of doing a Roth, they might want to think about doing it the
Next
following
year.
year. Yeah,
right.
Yeah.
I mean, I know, talking to some clients, whose income is very low. They don't have to file a return because of the type of the income they had, and they had an IRA, and they're like, well, what do we want to do? We don't know. And we're like, take it out. But we want it for later. Well, they could take out, it was like about $16,000
and not pay taxes.
Right. And put it in a Roth.
Right.
And they wouldn't pay tax.
Right. And it would never be taxed.
And it would, right. It's
so
just,
the whole thing is, many times, if you're somebody that doesn't have to pay taxes and you have those kind of investments, IRAs, annuities, that would be taxed later, take advantage of the standard deduction and personal exemptions and take it out even though you don't have to, so that you don't have to pay taxes later.
Yep,
take control of your own situation. And so it's easy for us to say, and I'm sure people driving their cars are going, I don't know what she's talking about. But that's part of what we do. We talk to people all the time, and we want to help you.
That's right. There's a guy who does exactly what you say now, and he says he wished he would have listened to you sooner because he's taking out money. He doesn't even have to pay tax, and he wished he would have known that he could have taken out more from his IRA.
Why we have the smartest taxpayers in Western New York,
Yeah.
because we try to keep them abreast of everything. And again, if during the week you have any questions, you can call us at the corporate office. You can email me at egtax.com, ask the tax lady, and I'll email you back. Now, sometimes you guys ask me questions like that are 5 pages long, and I need all this talking back and forth, and I'll say to you, just call us, because it's easier, because you can't just answer a tax question on a one-liner. You need a lot of information.
Dialogue.
All right? So, and a dialogue. But basically, email me. I'll answer your tax questions as best as I can, or I'll have you call the office. All right? Let's go back to the phones. And again, 803-0930, 803-0930, star 930 on cell phone. And we got Norma. Hey, Norma.
Hi.
How can we help you?
I have a weird kind of question. I'm
not weird.
Currently, I am not working due to a workplace accident, so I am collecting workers' compensation. I have also applied for Social Security disability, which I should be finding out within the next couple months if I'm going to get it. Now, the workers' compensation insurance carriers keep wanting me to settle.
Right.
Now, my attorney for the workers' comp says I'm 60 right now, and he said you're better off because I will continue to collect my workers' compensation check even if I do get the Social Security disability.
Right.
So he said I should wait until right before I turn 65 and then have them settle. And then something about taking that money and putting it into an account for whatever I'd have to pay at that time.
Okay, well, there's no doubt about it that when you're on workers' comp, it's completely tax-free, and you really need to put a pencil to the paper because if you're going to make more money in the long run, you're really giving up tax-free income if you settle. So you really have to, if you want to come to our office, we'll be very happy to sit down with you and talk to your attorney to make sure you have the best thing happen to you. Okay, Norma?
Right. That sounds good.
All right, sweetie.
Best thing.
Thank you very much. I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. And we're going to take a short break for the news, and we'll be back with your questions on the other side.
The heating season is here. Wentz Propane and Oil wants you to stay warm. Call today to schedule your delivery and get $100 off your next delivery if you refer a friend. Call Jack today at 731-9826 or 731-3015. Mention EG Tax for a special discount. Call today, 731-9826. That's 731-9826 for Wentz Propane and Oil.
Did you know that the IRS has already announced that they are delaying some refunds, at least until February 15, 2017? Were you counting on that refund? Let's tax plan now for the fourth quarter and maybe get more money in your paycheck. That's right. Use your money now instead of waiting for later. EG Tax offers year-round tax planning at no charge, so there's no hidden surprises for you come tax time. So this year, come join our family. Call 632-7886 or click egtax.com.
I second that emotion. Was that Smokey Robinson? Boy, oh boy, you can tell how old I am. I think Smokey Robinson was back in my heyday. Anyway, I'm Esther Gulius, the tax lady from EG Tax.
Smokey.
You remember Smokey?
I remember my mom. I remember my mom playing Smokey.
Like Smokey, right?
Yeah.
Anyway, we're talking taxes, and we want to get you ready for 2017 and 16 so that you're smart about what's going on, okay? Before I get to the phone calls, I wanted to talk about people that are self-employed. So self-employed taxpayers really pay a lot. They pay federal taxes, they pay state taxes, and they pay FICA, right? So if somebody's in a 25% bracket federal and they pay 15.3% FICA and 9% to New York State, they're paying like 48%, right?
That's stifling.
So a deduction to this kind of person, it means a whole lot.
Huge.
So wanted to talk about this. If you were to buy a truck for your business, because it's ordinary necessary, and you were thinking about waiting until next year. All right, we just told you tax brackets are going to go down next year, so you're not going to get as much bang for your buck. But let me give you an example. Let's say you buy a $30,000 truck that you use in your business, and you're using it 90% for business. So $27,000 is eligible for depreciation. You can do a special election and write off $25,000 off your tax return. And that taxpayer, if he's self-employed, would save $12,250 in taxes if he bought the truck on the 29th of December.
Yep, as long as it's
and he borrowed the money.
Right.
So
pretty
cool.
cool.
That's a big. Anyway, if you wait till next year, he'd lose $2,500 in tax savings because of the change in brackets.
And like you said, that person pays like 40% in taxes, so they should try to take every advantage.
And all of you people that are self-employed, you should at least be an LLC. Wouldn't you guys agree with that?
Oh, yeah, for the protection.
Yeah.
Absolutely. So
they can't to an LLC for the protection.
So they can't go after your personal assets. It makes you an entity of your own.
And if you need help, Auntie Esther and the gang will help you. So, you really should. And if just because you haven't gotten sued, thank your lucky stars, thank God, and give us a call so we can make you an LLC. Let's go back to the phone. So we got Mary Ellen. Hi, Mary Ellen. How can we help you?
Good afternoon. You were just talking about President Trump's tax rate. What if I have been paying 10%? Will my tax rate?
Well, actually, I think your tax rate is going to be completely eliminated. They're talking about getting rid of that tax bracket altogether, and you might not even pay any income taxes anymore.
Oh, wouldn't that be wonderful?
Yeah, so, it all depends on, what's going to happen, Sue. I mean, Mary Ellen, is that it all depends on what's really going to come down the pike for sure. They're talking about doubling standard deductions and getting rid of personal exemptions. So I don't know what they're going to do, but they are. There's definitely going to be tax savings down the road for you.
Oh, fantastic. And could you tell me the Medicare rate for 2017?
The Medicare rate?
Right.
You mean how much
Social Security?
You mean how much you get?
Oh, how much is coming out of your
Social Security?
Right.
Oh, cripe! I don't know. I don't know. Sorry. Wait, Tiff will look it up. She'll look it online.
I will.
And then if you keep listening after you hang up, we'll give you the answer in about 2 minutes. Okay?
And then, so for my IRA to do conversions to a Roth, I want to wait till next year also.
I would. It all depends. Are you a working lady, Mary Ellen? You are working?
Yes.
Okay. And may I ask you what's your income? 25, 30,000?
20.
And do you have children at home?
No, I'm 71, so I have to do the RMD.
Okay, so you got to take out your RMD.
But I have a 401k, and I do not have to claim that balance.
Because you're working.
And
Right. And so you have money into a traditional IRA and you wanted to roll it over to a Roth?
I can do that.
Okay, so here's the thing. Right now, I wouldn't do anything because you are paying taxes, and I wouldn't do anything and see what's coming down the pike here, because it may be a great opportunity for you to roll money from your traditional into a Roth next year as the rates drop, because I think there's going to be quite a substantial increase in the standard deduction. So I guess I would just put everything on hold if I didn't need to do anything. Like your RMD you got to do, but I wouldn't do anything with my traditional to Roth rollover right now.
Thank you so much.
Thanks, dear.
And
Chris has got the Medicare.
If you're paying $104.90 now a month, it's expected to go up to $109. If you're paying $121.80 a month, it's going up to $127 projected.
Okay.
Thank you so much.
You're welcome, dear.
Great day.
Great. Bye-bye. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 and a cell phone. One of other things that you should think about, grandmas and grandpas who want a tax deduction, and you got grandkids that are getting ready to go to college. Wouldn't it be a great thing to put money into their 529?
529, yep, their college saving plan, which will save you money on the
state.
New York return.
If you're paying New York State taxes and you can put money into a 529 plan for your grandchild, it's a deduction for grandma and grandpa, and the kids have part of their education.
Chris always says it has to be a New York 529.
Right. But I know a lot of people are, well, what if my grandchild or child doesn't go to college? Well, you have to their age 30 before you have to take it out. And then if they're still not in college at age 30, you could change the beneficiary to another grandchild. You could change, so you don't have to worry about that.
Right. But it's a great
deduction, tool,
right?
Yes.
The other thing is, we were talking about that before, is the deductible Christmas gifts. You can see why you wouldn't want to be on my Christmas list. New furniture for your home office, new computers for your business, new printers, laptops. You're out driving around, salesperson, GPS, new pictures for your home office, cell phones, things that you can use in business that would be deductible. And again, higher tax bracket year would be now.
That's right. Take the write-off this year.
All right. Let's go back to the phones, and we got Mr. Bill from Depew. Hey, Mr. Bill, how can we help you?
Hi, how's it going? I'm in the process of building a garage, but it's attached to the house, so I think it'll be considered like a capital improvement.
Right.
Is there a way I can get the sales tax back that I'm paying for the materials?
Okay, so the capital improvement meant that you didn't have to pay sales tax. Okay, and the only thing you can do is once you pay, you had to submit that when you were buying the lumber. If you didn't have the capital improvement thing and you paid it, it's too late. But you do get it as a potential itemized deduction, right, guys?
Okay.
Energy credit.
No, he's building
his sales tax.
Sales tax. Yeah, it was a sales tax. Absolutely,
right.
On the
sales
Schedule
tax
A.
would be an I. So if the lumber were $20,000 at 8%, that'd be like $1,700 that you could add when you're figuring out your sales tax deduction, because it's your state withholding or your sales tax, so that might help you. But but anybody that's building a capital improvement to their home has to submit a capital improvement certificate to the seller in order to have the sales taxes not be collected at site.
You're building it yourself?
I'm building it myself. Yeah. I didn't know I had to do all that paperwork. But,
this may help you out some as far as your federal return.
I mean, if you're not done buying all the material, when next time you go to Home Depot or Lowe's or 84 Lumber, get a capital improvement certificate.
So
you
that
download
they
it right
stop.
from New York State's website and hand it to them.
Otherwise, Esther has a good idea. If you're an itemizer, tucked away under your Schedule A is a place where you can write off your sales tax if you've already paid sales tax on it.
Okay?
Okay. All right.
Thank you, Mr. Bill. Have a great day. Okay, let's see. We got Sue. Hello, Sue. How are you? Hello, Sue. How are you?
Sue's not there.
You?
Hello, Sue.
I'm fine.
Can I help you?
Yes. A family member recently died, and I am in line to inherit a significant amount of money, a little over $100,000. Do I have to claim that on my income tax?
Well, maybe. It all depends on what the nature of the inheritance is. So is it an annuity or an IRA or a pension?
Cash. It's just going to be cash.
Okay, if it's cash and it's not out of a pension or an annuity, then it's going to be tax-free.
Wow.
That's pretty cool.
So when I leave here, I'll see the lady skipping down the street, and I'll know it's you.
So I don't even have to tell the government that?
Nope.
Thank you.
You're welcome, dear. Bye-bye. It's always nice to give somebody
That
good news,
is
isn't it?
really good. It warms the heart.
It does. It really does. Okay, let's go to, I got another Sue. Sue in Hamburg. Sue in Hamburg, how can we help you?
Hi, Esther. Thanks for taking the call.
Yeah, what can we do for you?
I've had a number of life changes in 2016, and I'm wondering which would be the best way for me to file income tax.
Okay.
2015, I claimed single head of household because of a disabled child.
All right, so you had a child that lived in your home.
Correct.
And the child was not working?
Disabled.
A year.
Okay.
But in August of this year, I got married, and my current husband has always had to pay income tax. And also in April of this year, I rented a condo, so I will have some rental income that is not in my husband's name, my current husband's name. So I'm wondering which would be the best way for me to file as married filing separately or married filing jointly.
Well, maybe. So here's the thing. You really won't know exactly which will be better for you until you actually do it both ways. My inclination would be you would probably want to file married filing jointly because any losses that your rental property would throw would not be deductible if you're married filing a separate return.
If you live together.
But I'm assuming you're living with your new husband, aren't you? Right?
Sometimes, yeah.
Aha. Well,
And
if
do
you're
you
living
work?
with,
Do you earn
if you're
money?
living with your husband, then they wouldn't allow you any rental losses if you filed separately. But the best way to do it is both ways. You can no longer file head of the household, though. You're either married joint or married separate. The head of the household status was only available to a single taxpayer or one that was considered single who has a dependent child living in their home. So it's either married joint or married separate. Probably married joint is going to be the best.
It is, but he's always had to pay taxes.
Well, see what you like. We have a program on our computer that says, okay, this is the liability, and we can say this is the amount that the refund that's due to you, Sue, and this is the amount that's due to his liability, and then the two of you can battle it out on the way home.
Yeah, and there's a allocation form. You
Right.
can actually put part of your refund
Refund
in
in
his
your-
account,
right.
part in your account.
Right.
Yeah, he is only in my name.
Right. When you get married, things change, and unfortunately, some of the benefits you got as head of the household went bye-bye when you said I do.
Oh, see, we hesitated for a long
Well, you can put on there, we hesitated a long time, but once you're married, you're married. So.
Okay, and then on top of it all, we bought a house.
Well, that's great. So you have a lot of complexities. You have the rental property. You have the purchase of the new house. You're going to need
Marriage.
your HUD-1 form. You got married. So what you might want to do, Sue, is give us a call, and we'll be very happy to kind of do a preliminary tax return so you and your husband know in advance.
Yeah, like
how
Chris
it's all gonna
and
work out.
Esther were saying deferred pension. I wonder if he maxed out his pension this year. That might help the answer on your joint return this year.
Does he work, Sue?
Both of us are retired.
Okay. Well, yeah. What I suggest you do is give us a jingle, and we'll work it all out.
And what about, now there's one more complication, and that is I have a piece of property that I should sell. Should I wait to sell it this year or next year?
Next year, the rates are projected to go down. So, like I said, income next year, deductions this year.
She's thinking next year.
Yep.
All righty.
Okay, dear?
Good. Thank you very
Thank
much.
you.
Congratulations.
Bye-bye. Congratulations. I don't know if she's glad or not glad. But, and that's what happens a lot of times. We're doing tax returns, and people walk in, and they're so happy they got married. But last year they had an earned income credit, and they had a household. And this year they don't get anything, and then they walk out.
Yeah.
Yeah. Because the rest of the year is great. The tax day is not so great.
Yeah, Chris and I sometimes have fun because we have the program at our disposal, and we'll try our return, married, filing, joint, and single. And single is always a better answer. No,
married filing separate.
No, but we've
Oh,
tried
it is absolutely true.
too.
If you were single, it'd be much better than being married
you
separate.
have.
Right?
I know you have.
Okay,
Told me the answer.
let's go. The other thing I want to talk about is is all the passive solar stuff. The federal credit is still 30%. New York State has a credit, and you can carry it forward. Unfortunately, they don't tell you for how long. And so the passive solar credits are still available.
Now,
that's something you might want to look at.
Make sure, though, you have tax liability before you buy it.
True. Also, those of you that are in business, you can only give gifts up to $25 and have them be deductible. However, if you take the gift that you're giving and you put your logo on it, then it becomes advertising, and then you're not subject to the $25 the $25 limit. I don't know if a Rolex with EG tax on it makes a really good gift, but I'm just saying you're not limited because it has the advertising on it. The other thing is make sure if you have your money in pre-tax funds, like for daycare at work, use the money before the end of the year, or what happens?
You'll lose it.
And it becomes taxable.
Yep, line 7. That's right.
So, and then let's see what else we got. Oh, New York State estimates. Why should people pay those now?
Because that bulks up their Schedule A, which is a great idea. More itemized deductions whittles away that tax liability.
That's right. And so make sure you get that. And then I think somebody before called and said that they're doing their RMD. If you're age 70 and a half, you must take out your required minimum distribution from your pension, your IRAs that you aren't withdrawing unless you're in a 401k plan and still working, because the penalty is a lot of money. How much is the penalty, Chris?
50%
of the money you didn't take out. Right. So if you were supposed to take out $10,000 and you don't, there's a $5,000 penalty.
Right.
So make sure you do that.
And don't forget, you can still take your required minimum distribution and have it go directly to a charity.
To your charity, which is great.
And you don't pay tax, you don't get the deduction, but you don't include it as income either.
And making your Social Security more taxable. Yep. Okay, let's quickly go to Joe. Hey, Joe, how can we help you?
Hi, sir. There's such a plethora of knowledge. I love on a previous show, I was motivated to create a sole proprietorship.
Okay.
And I was motivated to create an LLC.
Good for you.
By listening to your wisdom, yours and your staff.
I'm so glad.
And I did it. I had created the LLC, but then I got some other advice from my insurance man that. My group of properties has a $1 million
umbrella
coverage per property because of the nature of that group policy that they're all in,
Mm-hmm.
And that that making an LLC happen is more complicated than being a sole proprietorship. And really, what's the use if I have $1 million per property for liability? That maybe I should just leave it on site.
Okay, well, let me just say this. I used to have rental property, too, and I had an umbrella. You try to get those insurance companies to pay. Okay? First of all, whenever a litigant smells that you have insurance, they have a tendency to want to sue because the insurance company has deeper pockets than you. That's number one. And number two, if they know it's an LLC, they can only touch the assets on that one property. So, I mean, I don't think it's complicated to take care of an LLC. A single proprietor LLC is very simple. So, but it's just added protection. But Joe, you drive the ship. It's your decision.
Well, this is my question. I have amassed all the deeds, and right now I have an empty LLC. I guess the next step is just take.
Okay, so you're really not self-employed. You're a rental owner.
Well, I am also self-employed.
Okay, so you got an LLC on your business, and you're thinking of doing LLCs on all your rentals.
That's what it was for all my assets, really, to create an LLC to put all my assets.
Well, again, I just think anytime it makes it harder for someone to litigate, makes the lawyers not as happy, but it may make you happier. So it is true it's going to be more complicated to get it going, but not after that. Would you guys agree with that?
Right. And I wouldn't combine the rental properties
Into
with
one,
the self-employment either.
Right. You can't. The rental properties go on a Schedule E, and they have LLCs, and the sole proprietorship is an LLC. So those are completely different. Why don't you call us, Joe, so we can make sure you're doing it right?
Get one more small question.
Yeah.
I'm at a point that in my self-employment to where I can collect Social Security. It's not very much, but is income derived from rental incomes?
No. No, that's passive income, and it doesn't come under the cap up to age 60, up to age 65. So you're talking about, is it going to limit the amount of income that you get? But no, that doesn't.
Above and beyond what I would normally make just working part-time.
Correct.
Okay.
Okay, Joe. So call us so we can make sure you don't shoot yourself in the foot. Okay.
Yeah, you're so smart. I love listening to your show. I just sit outside of the gym, and I don't even want to hear your show.
Well, exercise for me, Joe. I need all the help I can get.
Oh, you exercise every day.
Thanks, Joe.
I'll be thinking about what you're telling me on the treadmill.
All right, thank you. Bye-bye. Actually, I walk 4 miles a day.
I know. You exercise
every day. All right,
we're
going to go quickly to Bill in Orchard Park. Hey, Bill.
Hi, how you doing?
Good.
Thank you for taking my call.
My pleasure.
Okay, I'm retired on Social Security, disability, and retirement. My wife's on Social Security. She's over 65. I'm only 62.
Uh-huh.
I have a 401k that I'm entitled to, but I'm wondering how that's going to affect my Social Security and my income for the year.
Okay, so here's the thing. If you start withdrawing from your 401k, the total income, if you and your wife, including half your Social Security income, exceeds $32,000, then the excess over $32,000 is going to be half taxable. So it all depends on how much you're taking out of your 401k. You got a number?
Actually, I have to take the whole thing, and it's roughly $60,000.
Why do you have to take the whole thing?
Because we're no longer employed.
Okay, roll it over, Bill. Roll it over from your employer to an IRA, and then none of it will be taxable until you want to take it out. At age 70 and a half, you'd have to start doing an RMD.
Okay.
Okay?
All right.
Thanks, Bill. Bye-bye. I'm Esther Golias, the tax lady from EG Tax. If you want help, we want to help you. So during the week, if you need help, call us at 632-7886. Visit us at egtax.com. We want to help, and we want to make sure you don't overpay your taxes. Until next week, I'm Esther Golias, the tax lady, with Tiffany and Chris, Fabian, and have a blessed week. Bye-bye.